Good afternoon, Scott Redler, T3Live. Welcome to today's recap. Today is Wednesday. People are just starting to not come in anymore. You know, it's almost everyone's just on holiday mode, but there's still some action. You know, yesterday we had the big move up well over 3%. The day that we're put back in a confirmed rally, and today definitely tested the metal. You know, a lot to absorb. Oracle, there was a lot of collateral damage. People just didn't blow off Oracle. They didn't price it in. And literally, you know, they beat up a lot of stocks really quickly through some key areas. And then in the afternoon, they came off their lows. I wrote a note like midday saying banks are a little strong. There are some, you know, one-offs in tech that look decent. But, you know, with the Dow down 60, it just feels a lot worse. And then at the end of the day, S&P goes positive, Dow goes positive, Nasdaq regrouped half. And, you know, we're still somewhat intact. We're just not off to the races. And why should we be? There's still a lot of problems out there. But if you take a quick look at the chart of the S&P, you'll see that here is the level that I drew this morning. You know, I said basically this would be a nice level to hold. This would be somewhat the top third of yesterday's big move. And here we are. You know, it closed relatively strong and it looks all right. If you take a look at the spiders, I tried to give you, a picture also shorter term. This was the line that I drew. And if you remember, tried to give traders a little bit of a look at how I would see things. You know, on the 5-minute chart, you will see that we outlined that 122.80, you know, or just say right around this flag. And, you know, it didn't hold, you know, this is a little scribble, but this was that flag, okay? This was the first move. And then, so you go across, and that's how I got this area, okay? And it kind of tailed into it and then worked its way back higher the rest of the day. So it didn't even make it down to the gap here, right? You see this gap? But if you take a quick look at the Qs, it's a much different story. You know, it not only, you know, broke this area, just to show you how relatively weak the Nasdaq was today, it broke this 55.40. It actually, you know, went into the gap and pretty much didn't really close the whole thing, and then, you know, came back up to close okay. If you look at the daily on the Qs, you know, not as good as the spiders, but is what it is. You know, Oracle is a big company, first time in a while that they, you know, put the slowdown on the table, whatever. You know, and then you look at other stocks like in IBM. You know, a lot of things you could have seen though, guys. This was when momentum left the stock. I was talking about perhaps a Santa Claus move here. You know, this was your wake-up call that it somewhat failed, okay, or get ready, it might not happen when it broke 190. This was your out for momentum, then it couldn't get back above, and then it came down real quick and tested this uptrend that's been intact. And then, you know, it did break, went as low as 179 and, you know, tried to close okay. So I guess at this point, we have a new point of reference and we'll see what has to happen. But if a stock like Oracle came out and really had a lot of bad things to say, everyone's always been confused. How is IBM so strong? How is it holding up in their service, their enterprise and whatnot? So there's rightly so to have some concerns. And then as far as the cloud stocks, whew, they got beat up quick. And thank goodness, you know, our go-to list changes. And I don't think you remember the last time I've really spoken about Salesforce.com or VMW, just because there hasn't been great trades there. It's been sloppy. It's under the moving averages. It hasn't been a stock that's worthy of our attention. So if you look here, you know, you will see that even before this move, it was below all the moving averages. I think this was the last time I said, let's watch out here for VMW. You know, if it breaks 94, get out of the way. You know, boom. And then once it broke this pivot here of, what was this, around 90, it is just very weak. So now I guess, you know, if you held it the whole time, I really don't know what to tell you except for you held through some sell signals and you must be a long-term holder from, I guess, the weekly chart of way back when. But if you look here, I guess looking at the weekly chart, to give it a shot, here you go. But, oops, sorry, hold on. But this to me looks like it could be troublesome. You know, you go to, you know, you move this over, and this does look a little bit like a head and shoulders pattern where, you know, you could see a quick little bounce here, but if this 75 doesn't hold, you know, look out below. You look at CRM, you know, another stock that lost a lot of momentum. It too, like this is the weekly. This is a pretty wide range bar. Never really was able to get above it. I guess when it broke here, about 110, that was the last sign you could have saw. If you look at the daily, maybe it's a little bit more concrete. Let's take a look. Yeah, I guess when it broke the bottom end, this 110, obviously you had a big gap down. It filled. This is just a sloppy stock. Not much I could even, say about this, except for it's been so sloppy that we haven't even really traded it. I haven't tried to trade it in a while. So typically, if I'm not trying to trade it or some of the other contributors, it just means that it's not a great conducive vehicle. And at times this was my go-to stock, I think 2 years ago when it went, not CRM, but VMW, but that just shows you how things change. The complexion changed on Netflix, it got weaker. The complexion changed on GMCR. That's how you have to watch, the tape and the price action and the technicals to show you when momentum leaves. So as far as today, some things that acted well, Apple, not so bad, right? Take a look at the chart. It said as long as it stays above this 50-day moving average, that I was going to stay with it, and I did stay with it. Then it closed really strong. There still is this pivot right here that once it starts to clear, I do think that 400 to 410, and then perhaps, I don't know if it's going to need earnings or what it's going to be, then it might deal with this, remember that gap from the island earnings? So we'll see, but it acted better today. It's worthy of an overnight. Guys who wanted to take overnights, I'm going to stay with it. Google, I got stopped out early on just because I didn't feel like dealing with it, but got back in a little bit because it popped back above this range. So I figured I would stay with some. If you look at the 5-minute chart, it came in real quick, right there. So that was just not really nice to see. So when it came into this gap, I said, you know what, I'll sell around here, and then I'll revisit at the end of the day because I don't want to deal with it. And there's definitely a lot to deal with as this thing went all the way down to 620. It did pop up towards the end of the day, and that's why it shows you how these things are sloppy. So that's why at the end of the day, I'm like, okay, back above 625, I'll stick with some, but the real trade is going to be above 630, 635. I don't know what it's going to take as far as news, but we'll figure that out. As far as the banks, really, Goldman Sachs sort of made my day. I was with it yesterday. It was a good trade, and then today it showed some relative strength. Around midday, around 1 o'clock, wasn't breaking down. I was like, oh, the banks look okay. JP Morgan looked okay, and then lo and behold, the settlement with Bank of America. Now, if you look at Goldman Sachs, it does seem like it still has some more room. It's trying to break above this small descending channel. There's no reason in my head, I guess, for a bounce play if the market hangs in the way it did today. It can't see this 95. Intraday, if you take a quick look here so you can see what I saw on the chart, right around, look at the high of the morning, okay? This was just right here. Right around, what is this, 130. So look where Goldman Sachs was. Nice little intraday cup and handle. So that's why I started buying it before I had to leave. And then look where the spiders were at the exact same time. Oh, actually, it traded with the spiders right around that time. So, well, all right. So I guess that's what helped the spiders go. Let's see what else. What might have not been like that. We could talk about maybe Amazon. Wasn't like that at 130. It was heading lower before bouncing a little bit. But anyway, it was showing some signs that it could be okay. And while I'm talking about Amazon, I know I had it on the radar if tech was strong, and basically it continues to be broken. It was a decent try from the long side, but then I think a lot of guys made more money short there. If you look at the daily chart on Amazon, it's still really, really negative. Take a look here. If you go to the chart of Amazon, you will see that this was the gap from earnings. Some ascending channel broke to the downside, another ascending channel broke to the downside, tried to have a reversal day here, couldn't really get anywhere yesterday. The market had a big day, didn't even participate, so that did show you some relative weakness. If we were strong, maybe I thought it could play catch up, and it just engulfed this whole range. So to me, this is still very, very troublesome. If you look more on the macro picture here, it's definitely stuck in a new downtrend. Here, high, lower high, lower high, lower high, another lower high. So, it's caught in this new downtrend, and we saw what happened when Netflix got caught in a new downtrend. It got really, really ugly. So perhaps this constricts at some point, and it tries to get going again, but it's below all the moving averages, and it just doesn't look good. Baidu and Sina woke up yesterday, and then today they were just weak, just like that. One-offs, dangerous. If you look at Baidu here, you will see that, take a closer look. This looks pretty ugly, guys. You had this wedge type formation, broke to the downside yesterday, gave us a nice trade through this lower pivot, and then pretty much engulfed it in one day. So if it stays right around here and doesn't rally and the market tries to, there's going to be a new level of shorts here, below this 111, 110. So below this 110, you're talking to move down to at least this, what is this? 100 area. So there could be a trade there, which would be nice for us, as long as things make sense. Amazon was a great trade for somebody that broke that area. For this one, if it could just do an inside day, this will be, your short area if it continues and the market wants to go lower. Sino also did the same type of thing. Tried to break above this bar. This was your outside day, and then today was pretty weak. It's still holding 50% of it, but it's only for the trader, not for the investor, and it doesn't look like it's going to hold in there. It's tried in the past, and it's still also caught in this, in this down move. This was the last time I think we talked about, it looking decent, and then pow, broke to the downside, came back up, retested, tried again, broke this support to the downside, and here we are again. So, high, lower high, lower high, lower high, lower high, lower high, lower high. Wow, even lower high. That's what you call a downtrend. And there's a lot of these stocks, when they change their complexion, you gotta trade along with them. So anyway, it's Wednesday. There's definitely some action. Today was, I guess, a win for the bulls if you could consider the news that we had to absorb. S&P went positive, Dow went positive, Nasdaq cut the loss in half. Not many leaders to hang our hat on. Oh, you know what? We spoke about JCPenney's this morning. Not a bad trade. I didn't do it, but this is nice, right? This is the type of pattern that we like to look for. Nice tight pattern. Traded through 34, closed at 34.60. So it shows you, something could be done in days like this. I wonder what Walmart looks like. Oh my goodness, look at Walmart, back at the highs. That's pretty cool. Target, we'll see what happens at Target. Target might, be a little bit of a catch-up trade tomorrow. Maybe I'll put it on the quick hits. If we can get above this 52.60s, descending channel could break to the upside. So lastly, if you're going to be here, make sure you're prepared. If you're going to be here, don't lose sight of your discipline. There's still stuff to do, but it is dangerous, and it doesn't seem like there's a lot of, what's the word? If something happens yesterday, it doesn't hold that much water the day after. Like yesterday, Baidu and Sino was strong. You had to, see early that it was relatively weak. Amazon didn't rally, and then all of a sudden, showed relative weakness, and then you get out of the way and look to get short. Apple still hung around, Google, it's sloppy. And then there were the banks. The banks were the place where there was a little bit more action. So each day, the trade keeps changing. I think the overall indices are still there. I don't know if we're going to run away. Obviously, we'll see what headlines we have to deal with tomorrow. Just do where your risk tolerance is and continue to move forward and hopefully put some days together. So if you're here trading for the holidays, maybe you're making a little extra Hanukkah gelt, or you could throw another present on the Christmas tree. With that said, see you in the morning. Have a great night. Scott Redler, T3 Live.